Hello, it's Jacob Garza with Big Texas Move. This is Scott Warren today. He is a mortgage specialist. He's been in this game for many, many decades, more than I have been in for sure. Maybe even more than I've been alive. I'm not sure. But we are here at Rudy's this morning for our Let's Talk About It Tuesdays. Right now, I've got the chorizo taco. Rudy's is kind of my go-to place for breakfast tacos because you can always count on them having breakfast tacos. They make some really good bacon chorizo tacos. Really excited about eating it here, and I'm super excited to learn from Scott more about the 2-1 Buydown that he has, that is a mortgage program. He's going to explain how that works today. But right now, we're going to eat a little breakfast, and in just a few, we'll be talking about that. So
let's hear it for Rudy's.
I'm going to give. Here we go. Check it out. This is my chorizo taco, and
that's the bacon taco.
There you go. And you know a chorizo taco is good when it's super oily and very orange. So I know it's a good one.
Awesome.
Welcome to Big Texas Move, where we talk about what it's like to live here in the North Texas area. Also about buying homes, financing homes, improving credit, everything you can imagine that would be needed to buy a home and live here and have an awesome time. That's what we cover over here. Today, we are super excited to have my friend Scott Warren on it with Infinity Mortgage Guaranteed Rate. I might have flipped those around a bit, but either way, really excited to have Scott. He is a pro. You probably just saw us eating tacos at Rudy's Tacos. But hey, great breakfast. My chorizo taco was great. I got my cup too, pinked out, of course. But welcome, Scott. We're excited to learn more about the 2-1 buy down that you have to talk about. I'll be asking questions because I learn as I go, and I also like to just become more and more aware of what's out there. This is pretty exciting for people that didn't know. You could actually buy down interest rates with portions of what's getting into the deal there, and you can use that to kind of put yourself in a better situation over the next couple of years. But Scott's going to tell us all about it. Scott, welcome.
Absolutely.
Take it away.
You bet. Hey, thanks, Jacob. Welcome, everybody. Hope everyone's tuning in and getting a little bit of information. I'm Scott Warren with Guaranteed Rate Affinity here in the Dallas-Fort Worth area. I'm currently over in the Plano office, and I kind of bounce around. Had a great breakfast this morning with Jacob. Big shout out to Rudy's. I love their breakfast tacos. And look forward to many of these opportunities to share insight and opportunities to lower your mortgage payment. Obviously, everyone knows that the rates have gone up considerably over the last 6 to 8 months. And we have what's called a 2-1 buy down. There's two ways to buy down your interest rate, either temporarily or permanently. And we strongly recommend you do the temporary buy down in hopes that the interest rates come back in favor in the next 24 months. And so what it basically does is it leverages your buying opportunity with the seller to get them to give you what's called a seller concession. We're now more in a buyer market as opposed to where we were in the seller's market. And so people are dropping prices, dropping, additional incentives to move their homes, whether it's a builder, whether it's an individual that's owned their home for 1 year, 5 year, 10 years. And to get into the meat and bones of it, if you'll give me just a second, I'm going to share a screen with you guys and talk all about the 2-1 buy down.
Awesome.
So
now something I'll bring up while you're bringing that screen up is obviously interest rates are going up. Everyone's aware of that. Some people are in panic mode. Some people are not so panicked. But it's important to understand also that while these interest rates are going up, our dollar is coming down. And inflation keeps rising. The dollar keeps shrinking. And one of the best ways to protect your dollars is to invest in real estate. Because in general, those real estate prices go up, go up, go up. There are places in the nation where they may come down. I know here in the North Texas area, particularly Plano, Frisco, McKinney, all around there where I live here, my kids go to Heritage High School at Frisco ISD. We're expected to continue growing. We're not expected to shrink. We're expected to continue increasing steadily over the years. And that's really, really impressive because if you think about it, while the economy shrinks, your dollar could grow if you own a home in this area. And that, you know, not only that, this is a great program that's going to allow you to make the most of the cash that you have now to even leverage it even better and make out even better as we move forward. And yeah, go ahead, take it back.
Absolutely, absolutely. And to tie on to that point, what people fail to realize is the interest rate that you pay today on your rental is 100%, and that's actually an inaccurate number because it's actually going to be more than 100% because you're not getting to write off the taxes and the interest that you're paying on a mortgage. So while your mortgage payment's 2,500 and let's say your rental's 2,200, well, a portion of that mortgage payment at 2,500 is going to be tax deductible. And so you're throwing 100% of your money away each month when you rent. You're not getting to write off your taxes, the interest in the tax is a property tax that you pay. And then also keep in mind, you're not going to get the appreciation that Jacob was talking about. So what we've come up with, and this is not a gimmick, this has been going on for years and years and years. We just haven't needed to use it here lately until the rates creeped up into the 7% range. So what we allow you to do is pay less for your mortgage for the first 2 years with the buy down program. And what this will tell you is it's a 30-year fixed rate product, conventional conforming and high balance loan amounts, FHA and VA conforming only. You can't go over the conforming loan amount. And then a 3% down payment options are available. So for those borrowers that meet the 3% down payment criteria, you can get into a home with 3% down, have the seller pay for the buy down. And I'll walk you through that step by step so you can see it's for new construction, existing homes. It helps ease that borrower into that new payment. And here's what it looks like. With a rate somewhere around 7% today on a conforming rate, you would buy it down for 2 years. And so your first 12 months would be 5%. Your second 12 months or your second year, your rate would be 6%. And then after 24 payments, your mortgage payment would go back to the 7%, which is on a $400,000 loan amount. You're looking at a actual mortgage payment of $2,661, but for the first 12 months it would be $2,147.
Wow, that's huge.
For the second 12 months it would be $2,398, and then it would revert to the 7% rate. The total cost of that, as you can see, your savings the first year is $513 per month. The second year it's $263 per month, giving you a grand total of $9,323 that the seller is going to contribute if they're able to. So if you get a $10,000 seller concession, you'll use $9,300 of it to buy your interest rate down to 5 the first year. It'll move up to 6 the second year. And in your 25th payment, okay, you will make the regular 7% interest payment.
And that's
yeah,
looking at what you're talking about here, Scott, is you're having the seller concession for a temporary buy down. Now, in every real estate deal, there's negotiations going on. Obviously, this is part of that negotiation. It's just something that we want to make sure that we've considered and we plan on doing from the beginning, because obviously if we want seller concessions instead of a discount on price, maybe we're going to go and ask for seller concessions in lieu of. We would construct it in a way that it all makes sense legally on the purchase. But that's why it's important to know what we have available, and that your real estate agent also knows, hey, this is how I want to do it. I'd like to do it, because kind of what Scott was just saying, you're paying yearly. And how does that work, Scott? I know there's that total of the 9,323.16 in this particular example, but it seems to me like you were going towards that second year. What happens if, say, I decide to refinance and I don't even make it to that second year?
That's a great question, and that's one of the differences we like to differentiate, Jacob, between the temporary buy down versus the actual hard buy down, where you're buying down the rate permanently. That money, actually, that total amount of 93.23.16 goes into an escrow account. each month we send in that additional monthly subsidy to the end investor that holds that mortgage. And so they're made whole. They get their full 7%, but that money is set aside in an escrow account. So after the first year and before the second year, if you go and refinance, whatever money is left over in that escrow account is the borrowers. It's not the sellers, because they've already given that money to the buyer, i.e., your client. Okay. And that money is theirs, and they can do with it. They can't cash it out. They can't say, hey, I'm done with the buy down. I don't want to do it anymore. They've signed legal documents that prohibit them from doing that. But that money is theirs. And if rates come down in the next 6 to 12 to 14, 15 months, whatever money is left over at the time of refinance can be used to pay for closing costs on the new refinance. Now, one of the things we're also doing here, in addition to the buy down offer, is if they buy with us and finance with us, they buy with Jacob and finance with Guarantee Rate Affinity. When they go to refinance, not only will they be able to roll over any of the money from the escrow account, but we will waive our lender fee on that refinance to soften the blow and soften the cost to your borrower when it comes time to refinance into that lower rate. So that's going to save them typically about $1,400. Okay. And we can't waive the title fees because that's not legal to do in Texas. But it will soften the cost and lower the cost to your borrower. So they're able to get the lower rate. If there's money left over in the escrow account, they're able to use that. And then we're going to save them actually $1,440 is our total fees. And so that will put them in a better position and cost them less to refinance and set them up for a win, as opposed to, oh my gosh, I got to spend another $6,000 on refinancing my loan. Not the case. We're going to save you $1,440. We're going to save you roll over whatever's in your escrow account, and that can cover some of your closing costs. So it's a great way to take advantage of the buyer's market that we have today and get your buyers off the fence and say, hey, look, for the first 12 months, your rate's 5%. For the second 12 months, your rate's 6%. We know the rates are going to fluctuate up and down over the next year or two until inflation gets in line. And obviously he mentioned what we're losing. We were talking about the value of $1 at breakfast. Yep. And what did we say? It's worth about 84 cents, I think, was the number you and I had come up with, Jacob. So yeah, there's an opportunity here to get your borrowers into a house, get them into a payment they're comfortable with, and then wait for the market to come to them. And then we refinance them into a lower fixed permanent rate.
Nice. Now, let me ask you a question, Scott.
Yeah.
So obviously, awesome, fantastic program. What do I need to qualify for this? Like, is there a particular credit score? Is there, what's going to allow me to qualify for a program like this?
On a conventional loan, you're going to want to have at least a 620 FICO score. Okay. But on that being the case, at 620, your rate's likely not going to be 7%. 7% is for your top line FICO score borrowers, your 695s to 720s and up. Yeah. Okay. The lower the score, the higher the rate. The higher the score, the lower the rate. It's common sense. And so this is typically going to be somebody with a 760 score and above. And that's where rates are today. Now, the Federal Reserve Board is about to make their announcement here in the next 20. I forget what time it's supposed to be announced. But they're going to be raising the federal funds rate another 3/4 of a point is the consensus. A lot of that's baked into the rate. But as we sit here today, and if I looked at what the 10-year Treasury is trading at, it has not moved that much. It's down less than 1 basis point. So they're anticipating that this is going to, I'm going to go ahead and stop sharing my screen. We had I got a warning that my connection wasn't that good. It said it was unstable. So apologize if anybody didn't catch that last part. But the bond market is very volatile. The rate market is very volatile. The mortgage market is very volatile. We're here to smooth that process, get you into a house, 5% start rate for the first year, 6% for the second year.
Awesome.
And the next 2 years, if rates come down in our favor, we'll refinance you and not charge you the 1440. So put your clients in a better position and set them up for success as opposed to failure.
Man, it's awesome to hear about that program. You know, I learned, I know when we started eating the tacos this morning, I was learning about it as I was going. So I was really excited to hear it. It sounded, I actually wasn't aware that you went yearly and that whatever you wasn't used, you'd be able to get back. That's pretty cool. But
and to tag on that, Jacob, real quick, the reason why we like, and I personally like this program as opposed to buying down the rate permanently.
Yeah.
From a 7% rate, there's only so much you can buy that rate down on a permanent basis, because we're going to get into fees and points, and we're going to get into a high cost loan, and we don't want to, violate that rule. And so every bit of the money, let's say you were able to buy it down to 6%, but you were paying the permanent buy down, and let's say it was going to cost you 3 points. Okay, that 3 points on a $400,000 loan is $12,000. What happens if rates drop to 5? You don't get any of that $12,000 back, right?
Yep.
If rates drop to 5 and we do the 2-1 temporary buy down, whatever's left over in your account, you're able to roll that over. Nice. So unless somebody is just dead set on doing a permanent buy down, I always recommend the temporary.
Sure. Now let's say we go 2 years, everything's gone, move forward. Now we're bouncing back to the normal rate that would be there after the 2-1 buy down. Do clients have the option to buy their rate down permanently at that point?
If they want to on a refinance, and they could roll that into their mortgage if there's enough equity. Sure. Okay. But I know you work with a lot of home builders, and a lot of the home builders, I'm sure we talked about this at breakfast, they're giving more of an incentive today than they were 6 months ago. Yeah. When the rates were in the 4s and people were paying $100,000 over list price. Okay. Now they're, pretty much begging for business, asking people to bring them clients. And so a lot of the home builders I've talked to are offering larger incentives. Right. So you can use that to do a couple of different things, all within the legal confines of, we've got to follow what's called TRID, and make sure that we're compliant with that. But they can absolutely buy down permanently after the fact if they would like to. Sure. If they get into that lower rate, let's say rates drop to 5.5 in 18 months, they can take that. They're going to be at the very tail end of their buy down. There's going to be $1,500 left over, give or take. They can use that to refinance to a 5.5% rate, because they would be at 6 a year and a half in. They're going to be at 6, right? Yep. So if they had 6 months left, they're going to have about $1,500 in their escrow account. They can use that towards the refinance. If their equity has come up enough, we get a new appraisal, and let's say their house is appreciated enough, their mortgage insurance might be lower. Depending on how much they put down, their mortgage insurance might get waived or removed because they're now at 80% or below the value of their home on what they owe. So a lot of options. Again, what we're here to do is educate folks, give them the opportunity to learn more about it. If you have any questions, you can always reach out to Jacob or myself. I think all of our numbers were on the slide. If you'll make sure that we can tagline our phone numbers and office phone numbers, that'd be great, Jacob. But yeah, here again, just try to educate the folks.
Well, hey, Scott, I'm super grateful that you were on the show today. I'm really excited that we're able to go over the 2-1 buy down. I mean, that is huge for anybody looking to save money over the next few years, hoping that maybe they can refinance later on and save even more money that way. One of the best things about our market here is everything's pretty strong. We have a lot of new homes being built, a lot of homes that are already built. people are constantly coming and going. We have an incredible amount of families here. I mean, Frisco ISD has, from what I understand, 13 high schools. That's just one ISD, and they're not small high schools. They're 5A high schools. So it's a lot of families, a lot of students, a lot of wonderful things. These programs help people get here. We're kind of Texas is blessed that our market didn't really balloon like the rest, so you can still get a really good value on what you're buying here. Protect your cash by having it in real estate. Use smart programs like what Scott was talking about, and all these things. Like Scott said, you can talk to Scott. He is a pro. He's been in this business for a long time, decades and decades. He's like Gandalf.
No, no, no hair. I've pulled it all. I've pulled it all out, or it's all fallen out from the decades of experience. But no, we're happy to partner with Lionheart Realty and just educate the folks that, hey, there's different ways to finance your house. You don't have to just go with a mortgage, put 5% down, 10% down, and take the prevailing interest rate that's unfortunately a lot higher than it was 6 months ago. I just closed on my house in March, and my rate's half of what it is today. And so I was fortunate. I locked it, at the beginning of the year, and with a builder, and got a great rate. But again, buy the house, as they say, date the rate. That's
date the rate
and
marry the house.
I know people. Yeah, I know people hate cliches, but rates come and go. And if you look historically, one of the things we'll bring up on the next series, Jacob, is going to go, let's go back through the rates over the last 5 decades and show people rates are really not that high when it comes to historical perspective. So I look forward to talking to you about that. I've got a great slide I can share with you.
Well, thank you again, Scott Warren with eFinity, guaranteed rate. Super excited. Thanks again for everybody for being on Big Texas Move. Obviously, I'm with Lionheart Realty team. We are excited to help.
Reach out to Jacob to buy a house, and reach out to Scott to finance your house.
That's right. Have a great day, and we'll see you next time. We will be talking about how you can actually buy a house with no credit check.
There you go. That's
privacy.
Hey, I want to learn that one.
Privacy. Maybe you're down on your credit. There's all kinds of reasons that could be a good thing. But yeah, we'll be talking with Emilio Cinelli about how you can actually do it with no credit check. And you know what? There are some programs out there for everybody. And
I love it. I might have a client. I might have a client or two for you.
I hope so. Well, have a great one, and we'll see you next time.
You got it. Thank you, Jacob. Have a blessed day, everybody.